Tempered demand from an interest-sensitive buyer is going to make the difference. The quality of the craftsmanship is going to improve as we are starting to focus on better materials, better workmanship. They're going to have to give us better incentives for buying new houses, and owners are going to have to take better care and resource of the house that they already have that they want to put on the market because of that heavy builder competition that they're in the middle of. That's right, owners. You already have the house. It needs to be in top condition before you put it on a market when there's so many investment builders out there that are giving not only incentives, but cash at the closing table to get people to buy their homes. While price growth is still slowing, it's still higher than it was last year, still very positive on the ticker. And it continues the housing, even with the housing scarcity in a lot of markets. And that's not necessarily the case here in Florida. We have got builder after builder that is able to create a housing market and a move here. Buyers can expect modest growth. Sellers can price properties accordingly based on their comps and still be able to sell their homes. I'm going to tell you now, do not overprice your home. It's going to sit on the market double the average, which is about 3.5 to 4 months right now. If you don't want your house on the market for 8 months, price it according to the comps in the neighborhood. That's going to show you exactly what's working. I hear you real estate agents already whispering in the background. I'm seeing all the thumbs up and the funny faces that are coming up on my live feed right now. I'm telling you, realtors, you have a responsibility to educate and over-educate your sellers. They're putting themselves in a position right now that they're putting those houses still peak pricing because they still see some prices going up, and let's take the risk because we have time. That strategy is going to burn them into next year, and that's not going to be where they want as the builders continue to catch up with what they need to do to meet demand. To succeed in an evolving market, you better have your CRM in line. You need to be able to run some automated lead nurturing because if the market temperature continues to improve as we're predicting, your contact management is going to be your only source of employment. Everything needs to be geared towards keeping your pipeline moving. Everything needs to be geared towards a hot and balanced market. It's going to be a suitable solution for agents while they're developing their business next year, and they need to start now. Mortgage rate trends. Mortgage rates will not return to pre-2022 rates. It's simply not going to happen. But most of the forecasts are envisioning modest declines all the way through 2026. Fannie Mae is forecasting a 30-year fixed mortgage rate to settle at about 6.2 by the end of 2026. Modestly below the mid 6% is going to be good. I am seeing the old 3-2-1s that are coming back from the builders right now. I'm seeing rates as low as 3.99% for at least the introductory year for the builder, and then 1% increase within the next 2 years following. Modest decline is going to be based on expectations of that ongoing moderation in the inflation and the viability of interest rate cuts by the Federal Reserve. Unless you are living under a rock, you can already see where the federal pressures on the Fed and interest rates are causing some distress. So keep your heavy eyes on that one. If we get some change in the Fed and they decide to release some of the pressures of the mortgage and the interest rates that are out there, Feds make a real rate cut and not just these trickle and holds that they have been pulling, then trust me, Katie bar the door, everybody is going to be in the housing market because they're just sitting there with the engine idling now, which means inventory levels had better be able to support it. Predictions on the housing market inventory still show a modest rise for this next year. Demand is going to continue to outpace just a little bit the supply on the market. That's good for resale. That means that the people that are sitting on their homes right now, if you have been thinking about whether or not you should be putting your house on the market, now's a good time to do it. Nationally, new listings are on the rise at a slow pace, but still rising since homeowners are still stuck on that low rate mortgage that they've been sitting on for a couple of years now. The supply picture is heading in the right direction. Full inventory recovery in 2026 isn't going to happen, But especially in the metro areas where there's restrictive zoning, high construction costs, that's going to be to the buyer's benefit, and it's going to help people move more to a rural extension of where they want to buy. Then let's talk about the demand shift, buyer seller. So if we get rates stabilized to drop, more inventory hitting the market, buying and selling activity are both going to pick up in 2026. If you follow the NAR and you follow the chief economist, even they anticipate about 11% rise in sales of new homes in this next year and an 8% rise in homes the following year, right? That still smells increase, and that's good. As a result of buyers' pent up demand from 2023 and 2024 and those affordability challenges, the softening of the interest rates are going to force people to go ahead and make a decision to buy into the market. So, on the selling side, on the sales side, 2026 housing market looks to be improved. You're going to be, as a current owner, in a much better equity position because you sat on your house longer, because you weren't in a position to lose your cheaper interest rate, and the housing market continued to support you. So, buyer demand is going to be a little bit biased towards the affordability of the market, but because you have received more equity in this last year that you've been holding onto your house, you're going to be in a stronger position to even allow some additional negotiations at the table to compete with the builder's market. Buyer demand is still going to be a little bit of bias because of the affordability. So please be conscious. If you're in the higher price market, you are really begging for the interest rates to fall before people are going to be willing to buy the higher end homes in each of the communities. With changing habits in the buying and the selling, predictive technologies are becoming increasingly necessary. If you are not involved with an analysis tool in your real estate game, you are severely cutting yourself short. You need behavioral tracking mechanisms to show what's happening in your golden neighborhood, what's happening in the community you represent most. Do not shotgun your way through real estate challenges this year. You need to be focused in your market, know your market well, and don't take off the gas. Back to construction for a bit. On the new build forecast, all the data shows that new single family housing construction is going to rebound in this next year. Labor shortages are going to cause some trouble. Land values and cost pressures are going to temper the rebound, but it's still going to happen. We still have plenty of new construction, plenty of new permits that are out there. And after 2 years of drops in 2024 and 2025, the census is finally starting to show modest turnaround in the second half of this year. So that's fantastic as we move forward into 2026. Builders are going to continue with that buy to rent and energy efficient designs so they can accommodate some shifting demand towards buyers. But ultimately, multi generational, smaller houses are going to grow in popularity during events like this. As interest rates are likely to temper as well in this next 12 months, the home builder confidence and the home buyer confidence are both going to increase. I'm telling you, people are literally sitting at the red light, revving their engine, waiting for interest rates to drop. And any type of relief that we get from the government on this is going to allow the buyer's market to really rip through and capitalize on a lot of this sitting inventory. Let's talk about the regional and the metro area forecasts just a little bit. Housing markets are going to continue to differ by region. I'm going to focus on the Southeast. We've got affordability, we've got job growth, we've got good climate, we've got tax policy that will all be influenced throughout 2026, all headed towards benefits to the buyers and the current owners. So it should make a nice partnership at the negotiating table on both sides.